So what we're going to do is we're going to put in a trade now so you can see in a live environment what it looks like. This is a trade that is very typical and it's very easy to do. I'm going to show you. There's 2 clicks and you're done. So we're going to be buying 100 shares of a stock and we're going to be selling 1 contract against it, just so you can get the feel of it. Now, obviously we're going to crank this up as we go along, but this is a pretty good trade I think you're going to like. So let's do it. Okay, so now we've gotten to the point where we're actually going to see an option trade in action. All right, so look over my shoulder. We're going to do some NVIDIA. So NVIDIA right now, you see it's about trading at 434.38, and it's moving all over because the market's open. Now, I want to show you something live so you get the idea of what it's like to trade while things are live. So we're going to buy 100 shares of NVIDIA. So I right mouse click on that, and I just hit my buy. It brings up a buy order. I go ahead and put an order at basically a market or limited market, which basically means give me the best price that's available right now. And you could see in the trading account, there's my 100 shares of NVIDIA. So now I'm going to pull up my options chain on NVIDIA, and you'll see it come out. We're going to go out 3 weeks, 18 days. And so we're going to look at the 435s, which are trading for 21.55 is the bid price. That's the wholesale. That's what we would get when we sell. We want to sell options. Or we can go deep in the money. So we might go 10 deep in the money, or 5 deep in the money, 10 deep in the money, 15 deep in the money. We have all these choices. And you can see we get more money because that's more protection as you go deeper and deeper in the money, as you go up the option chain. So right now, all we're going to do is we're going to be happy taking our 2180. So we're going to right mouse click on that. We're going to sell 1 contract because 1 contract is 100 shares. We're going to go here at 2180 and hope to get a price improvement, which we may get.
Order filled.
And the order was filled at 2201, not 2180. So sometimes when you give the market maker a little bit of money so that they can stay in business, they end up doing you a favor and kind of splitting the difference. So they didn't give us a perfect fill in the middle, but we got 20 cents price improvement. Now I'm going to go back and analyze what exactly has happened. So we bought 100 shares of NVIDIA. We paid $434.94 for 100 shares of that. So we have $43,500 invested. Okay, that's that amount right there. Then we went and sold a call against it, and we got $21.99.80 plus the commission. It was basically $22. So that is the price that we got, and you could see it's already moving. We're down $36 on it. That's going to move all over the place because that spread, 2180 by 2280, that's a full dollar. And so that's the way it works. Now let's look at what happens. If NVIDIA stays at 435, okay, which is where it is today, right now it's at, you can see it, 434.91 by 435.11, nice little spread in there, but it's right around 435. If it stays there, we end up keeping this entire market value or this entire cost basis of the 1 NVIDIA contract that we sold. That's $2,200 that we put back in our account. That's why it's red and it shows with a little minus sign in front of it, because that's our money. It's short. The long one, unfortunately, they do it green and red, but that's the way brokerage firms do it. That's their money. I mean, we spent $43,528. So that's our base position. I want you to start thinking of things as base positions when they're the underlying, and then the option is the option that we sell against it, and that's not our base position. That's our variable position that we move every week or every month. All right. So all we're doing is we're hoping that in the next 18 days this thing stays at 435, but we do have $22 worth of cushion. And so if it goes down $22, we've got some cushion. We're still at break even, and we can do a trade adjustment accordingly. So that's really the way that you analyze this. And now I'm going to go into the ROI on it so you can get a good idea. All right, now here's the really exciting part. This is where we take what we just did and we analyze the ROI on it. Actually, you should do it in the opposite direction, but I wanted to throw you right into the deep end and show you what it's like to do a trade, and I'll show you the analyzed ROI. I had a rough idea from a rough calculation that I did before we did the trade, knowing that it was going to be pretty good because it moves around so much, you got to get a rough idea. Anyway, so let's analyze that trade. So we bought 100 shares of NVIDIA at $435.27. Now these are after commissions. There's still some commissions in my account, especially on the option side. But that doesn't matter. Commissions really don't matter. That's the cost of doing business, so ignore commissions. I mean, obviously, if you're spending a huge amount of money at a big brokerage firm, you want to get that taken care of. You want to get to a discount broker like E-Trade, Schwab, Ameritrade, Fidelity, whoever, because you don't want to be paying commissions. But we're not going to start looking at the commissions. Yes, they're taken out of here, but it's really just pennies. So it's not going to make much of a difference, you'll see. So we bought 100 shares of NVIDIA at $435.27. Then what we did is sold. That's what SLD means. BOT, by the way, means bought. We sold one contract. Remember, one contract is 100 shares. We got $21.98 for that, right? So if you look at both of those situations and you say, okay, my basis in this, my break-even price is $413.29. That's how much you basically have invested in the position. So that's, $435 minus $21.38 is $413.29, $413. So this thing could drop to $413.29 before you start to even lose money. So it gives you that built-in protection, that built-in cushion. And you could see that $21.98, since the stock is right at $435 and we're buying the $435 strikes, that's all juice. You got that yet? Because I want you to start thinking in terms of protection and juice, or in the money amount and time premium, those two components. So protection and juice. So let's keep going. All right, we've got a break even at $413.29. That means if the NVIDIA stays over $435, okay, by the strike price, which is 18 days from now, we make $21.71. How did we get that? Well, we took our basis price and subtracted from the price that the stock gets taken away from us at $435. Now, we're probably not going to let it get taken away from us. That's the hint. But don't worry about that yet. We're just going to assume that $435 is the best case scenario, and the stock is at $435. We're going to make $21.71. So $435 minus our basis, which is $413.29. That's the $21.71 we make. To do the calculation for ROI, you take your $21.71, which is your profit, and you divide it by your basis. Gives us 5.25% for 18 days. 5.25% for 18 days. I mean, that's amazing, right? I mean, a lot of people don't get 5.25% for a whole year, or maybe just a little bit more, 8 or 9% for a whole year. We're getting it in 18 days. So if you were to just have the perfect scenario happen over and over and over again as we rent these stocks, right? As we rent NVIDIA to those gambler people, those risky people on the other side of the trade, we'd make 5.25 every 18 days. You do that 20 times, that's roughly a year, that's 106% return. Do you start to see the power of the cash flow machine? And 106% is great. And if everything works out perfectly, that's what happens. But in life, not everything works out perfectly as you plan. So we have trade adjustments and we have other ways of gathering leverage. But right now, I want you to understand, I'm buying 100 shares of the stock. I'm selling one contract or 100 shares of the contract. My break even is this. If it stays at or above the strike price of $435 or whatever the strike price is, I'm going to make this profit. That profit divided by my basis is my percentage return for the number of days that I'm in it. So it's a very powerful strategy. There's a lot more to it now. Now we're going to have some rules around it. When you get in, when you get out, how deep in the money you do, and all that kind of stuff. But that's how I do it. It was really simple, right? You buy the stock. You sell the option. You are now in it for 18 days. It's that simple. Okay, hope that helps you. That's an example of NVIDIA. So what'd you think? Pretty cool, right? That's a typical trade, and that's the kind of trade we're going to be doing more and more of. But that's not the ultimate trade. That's the basic trade. We're going to add some juice into this later on, where we really crank up the excitement and the potential and the leverage of the cash flow machine system. Once you get all this stuff, it just clicks in, guys. I guarantee you that it's going to click in. Options trading is not intuitive. It's a little bit complex, and that's why most people don't do it. You're going to get it, and once you get it, it's going to be a piece of cake. I promise you. Trust me. That's what this whole system is set up to do. So, I'll see you on the next video.